Patrick Findaro here, co-founder at Vetted Biz. Today, I'm very excited to have on Al Lesko, who's a funding strategist at Fund My Franchise. Today, we're going to talk about most popular ways to finance a franchise investment. This includes an SBA, Small Business Administration loan, a 401k rollover, as well as a personal loan. So we're going to go through different ways that you can finance that dream franchise. And Al, thanks for joining us today.
Hey, thanks for having me. I appreciate the opportunity.
No, yeah, and it was great connecting at the FBA, the Franchise Brokers Association conference in Orlando. I learned a lot just talking to a lot of the franchise brokers, franchisors, as well as just speaking to you on the funding environment. And I thought that you have a lot of knowledge, and let's get that out there and spread the wealth, where you've done a lot of franchise finance transactions, much more open than from some of the other funding strategists I've spoke to, that you have many different options for financing a franchise, and you're willing to work with the investor until the end, navigating the bureaucracy at some of these banks and funding firms. So Al, it's great to have you on. And maybe first, before we go into the different funding options, how did you enter in this space, financing franchises?
You know, it's kind of a unique journey. I'm actually, I used to work in the auto industry, and I worked for a publicly traded company and in operations. So I didn't like corporate America. I shouldn't say I didn't like it. Wanted to do my own thing. I've always been entrepreneurial. So I entered into the franchise industry, and I've done just about everything in it. But my frustration was really what my whole niche is, which is when I was working with a lot of these funding strategists or funding sources, they really were just kind of, looking for low-hanging fruit, and they really weren't coaching and guiding these clients. And I saw a lot of deals that should have been done that didn't get done. And I thought, this is my opportunity. It made a lot of sense. I enjoy helping people, and I enjoy helping people succeed in business. So for me, it was just dive in that way. That's
great. Any idea how many people you've helped basically fund a franchise investment?
Wow. Right now I'm averaging probably 15 to 20 a month. Wow. But then you got to consider that I used to be a franchise consultant full-time as well. And, awful lot of deals that way, and also as a franchise rep prior. So I couldn't even imagine, really.
We're talking about in the hundreds of cases.
Oh, without a doubt.
That's great. I'm sure every client case you work on, it's kind of learning from the prior one, how to improve it, what's a better option.
Yeah, and it's a moving target. Lending is a moving target. Things are changing all the time. I just received a couple of things from the bank and say this is what the new SBA policy is going to be. So, you really have to be adaptive, and you really have to be in this business full time to be a benefit to your clients.
Yeah, I mean, and I've seen that there are options where you're dealing directly with a bank or directly with a 401k rollover, but a specialist, but that's all they do. And, you might not, that might not be that best option for you. So it's great that you can work with the client, and you can work with many different banks and see who I guess has the best terms and the best structuring.
Well, you want to put yourself in an advantage, a client should. And to be honest with you, if you're working directly with a bank, sometimes that's not in your best interest, because the bank has their best interest in mind. You might need somebody in between there that knows what the bank's rules are, what they're looking for, and then of course what you're trying to achieve, and to put that package together correctly so it works for everybody.
Well said. So let's get right into it. One of the most popular ways to finance a small business investment, acquisition, start up a small business, or even start up a franchise or buy a franchise is through the SBA 7A loan program. Mm-hmm. And at Vetted Biz, we've gone through 1.1 million loans, of which 100,000 were to franchisees. So we get it from the data side, but I don't get it as well from the process and the nuances and the actual deal structuring and making it happen. So tell us a little bit about the SBA 7A loan program as it applies to someone investing in a franchise.
Well, I think the first thing you start with is, what is the size of the loan? What is the industry of the loan? What do the person's financials and financial profile look like? And then, of course, you also have to look at the FDD, the franchise itself, and see the strength of that. And then it helps to work with many different banks to know exactly what they're looking for. So part of my strategy is to do a full interview with a client that's seeking an SBA loan and say, where do we want to place them? What type of bank was going to look for this loan? Is this fit the bank's size of the loan? Because banks are looking at, some banks will only do loans that are 350 up. Some banks will only do loans 50,000 to 150.
And it's a moving target, right? You could have a new credit chief credit officer who just decides overnight, hey, we're not doing this industry anymore.
Oh, absolutely. And I think that's the next most important part, is knowing the gatekeeper at the bank. You're going to be dealing with multiple people that make decisions at the bank, and each step in the process should be planned prior to going through the whole process of getting that the SBA 7A loan.
And we've studied fintechs extensively over the last 3 or so years that are in the SBA marketplace. And the reality is they're not going to more than 5 banks. They have 5 banks, and it's either you do this specific product in this specific industry, or they're not going to work with you. So even what I've seen the rise in technology, especially financial tech, there's still a relationship thing here where there's not a central depository where every credit officer is saying, I want this loan, where you really need to have an advisor kind of working with the different banks and the different gatekeepers, as you said.
There's no substitute for it. In fact, sometimes we'll have a bank say no when they initially said yes. We'll simply be in a position to move to another bank that will say yes. You also have some secondary banks that are trying to get preferred lending status, with the SBA, and they're hungry. So they might be more willing to take on a loan. It'll take a little longer. They're not a PLP approved yet, but that might be an option where another bank says no. I think that's our biggest advantage in what we do at Fund My Franchise, is that we go those extra miles. Instead of just saying, well, it didn't go through, we're going to work harder. We have options. And as long as that client is patient, we'll find them the loan in most cases.
And let's use a sample case. Someone wants to open up a service franchise. A lot of it's going to be the franchise fee, working capital, initial rent deposit, say all in investment $150K. How could you work with that type of client that's not investing $1 million, but they're investing, closer to 100, 200,000?
We do an awful lot of those. In fact, right now they're very popular to get those SBA loans through at the bank, certain banks that like the smaller size loans. There's a lot of good reasons for that. You mentioned a service related business. Cash flows quick. They don't have to have a brick and mortar location. There's always an audience to buy that industry should the person want to sell it. So the bank's risk is mitigated. So yeah, we like those kind of loans. Now, what we'll do with a client is we're going to look at that FDD, the franchise disclosure document. We're going to look at that item 7 and see where we can position them to have the best, how do I want to say this, the most amount of liquid capital going into that loan. They're going to be properly capitalized, if not overcapitalized. So that's going to give them a greater chance of success in that particular industry. So we'll look at where that money is itemized in item 7. And that's how we're going to package that loan, talk about the use of funds. And you mentioned something else that's very important that the banks look at. And that is when you have a very high franchise fee because you're buying maybe a territory or whatever, the bank's going to say, well, okay, that might be more of a risk, because it's like, what happens? What do we get if this person defaults?
Yeah, can you sell that at 25 cents on the dollar, 50 cents on the dollar? Probably some great territories, yeah.
Exactly.
Great brand territories in a prime market.
I guess if I had one wish, I wish that these attorneys, these franchise attorneys that are working with these franchises when they draft their FDD, would talk to a funding specialist or a bank specialist about what they're looking for. And then that FDD would be much easier for a bank's palate to say yes to a loan.
That's interesting. We'll have to talk offline on that, how we can make it easier for everyone in the franchise ecosystem.
Sounds great.
So someone say that, you've gone through the item 7 in the franchise disclosure document, also called the FDD, and say the range is anywhere from 80 to $150,000.
Mhm.
What kind of loan do you see in practice them getting for that type of franchise investment?
Well, what we'll do is we'll look at the area of the country they're in and we'll do some demographics. You're a data guy, I'm a data guy myself. So I'm gonna say, how much money are they really gonna need?
Yeah.
What does that item 7 really cover? Is it made to just get them in the door? Or, if they're in a high market or a high dollar market area, we want to make sure we get them the most we can. Again, the goal being, look, you can get that loan and you can pay that loan back at any time without any prepayment penalty. Why not get enough or even more extra than trying to shoestring it and get into the business? So we're going to try to coach them on that and say, you don't need it. You don't need it. I mean, maybe your loan payment's $100 or $200 higher, but wouldn't you rather have that security? So we do try to make sure that they get enough money.
Okay. So, and then is it usually 15% invested capital, 30%? Because I've heard different numbers in terms of how much the bank wants to see that you have skin in the game when opening up a franchise.
It's funny. I kind of make this joke when I'm talking to clients, but if you read it, they'll say 10%, right? It's not really 10%. On a $100,000 loan, you're required to put in 11.1%, $11,111. At least where I went to school, that's 11.1%.
Exactly.
They're also looking that you have some type of liquidity. This is on loans 50 to 150. The loan isn't secured by collateral like your home or whatever, but it's actually collateralized by the business assets. But they want to make sure that the client isn't or has some rainy day funds. So they'll want to see 50,000 in either cash, stocks and bonds, IRA or 401k, something they could liquidate should they get off to a slow start, or God forbid, a shutdown like COVID. They'll be able to make their payments.
So you're telling me on a franchise, it's going to be like 100K to start up, including 4 months of working capital. They could do like potentially 11,000 down. They have 50K in their Charles Schwab or E-Trade account. And then they're getting a loan of say 89,000.
No, they'd actually get a loan for 100,000, the full 100,000. So they put, all the bank wants to see is they want to see that 11,111 or 11.1% sitting in a business checking account or savings account. And then they want to see that 50,000 in either cash, stocks and bond, IRA or 401k in some type of personal account. And the bank will say, if you have this, if your credit and all the other particulars are up to snuff, they'll grant you a $100,000 loan. Generally, those loans will fund in anywhere from 9 to 12 weeks.
Oh, so in terms of the cost of one of these SBA 7(a) loans, I understand that by regulation, it can't be any more than prime plus 2.75. Can you go in a little bit what that actually means for someone that's trying to get a loan to fund their franchise?
Yeah, if the loan exceeds 150, we like to use a 20-20 rule, which is basically 20% in other words, they're putting it into the business. It's their money. They're just showing it. And 20 in reserve. Now, certain industries will be more than that, like restaurants or gyms will sometimes be 25% in or whatever. The 2.75, the banks are allowed to add to whatever the prime rate is. The prime rate is regulated by the Fed. When you see Feds raise interest rates, you'll see that prime rate go up. It's the Wall Street.
And right now, does that come out to like 5%?
6% right now.
And inflation's at what? Around 5%? 4.5. So
yeah, that's what's got us worried a little bit. With inflation up, the Feds have talked about raising interest rates twice in the next year. You got to kind of think about that. We talked a little bit. An election year is going to affect that. They're going to try to avoid that as much as they can without letting inflation get out of hand. I think realistically, people need to look at it and say, what's going to happen in the next 3 to 5 years based on what you're seeing. And that's going to be pretty much what your average interest rate is going to be for that term of that loan. I like to look at it, it's a 10-year loan. You have to be a little bit political thinking, you got different people changing or whatever, but elections are won by the economy, really. In a lot of cases, it's one of the major issues. So keeping that interest rate low, which is a historical low right now, is probably going to go up a little bit just based upon current conditions of
Well,
inflation.
even if it goes up a bit, I mean, if within like that's like a cost of 2%, that's ridiculously cheap capital.
Yeah, it is because, I go back and the highest I've seen it since I've been doing this is 8.5% on loans 150 or less. So, and that wasn't all that long ago. We're talking about 5-6 years ago.
Okay.
So we're at historically low interest rates, and it's a great time now if you're going to invest in yourself. I mean, I think there's 100 reasons why you could think about investing in yourself, making those pros opposed to the cons. But you're not going to get cheaper money. You're really not.
And like say it's 6%, are banks trying to compete and go beyond that minimum, or is it kind of 6% across the majority of SBA lenders? Okay.
They hold the line really tight. I mean, there could be some other factors. If there's usually where if somebody's going to pledge more property, or if they're buying property, you're going to see less capital in and a longer term on the loan. But generally speaking, that interest rate is going to stay pretty stable.
So where there's some room to negotiate and kind of the art of the deal is in like basically the percentage of the loan for the invested capital. So like you use that example, you're investing $11,000 in the business, you get a loan for $100,000. Yes, you need to have another 50K sitting there in reserves.
Yeah, we like that because for a couple of reasons. People get into the business and, life happens, business happens. They may get an opportunity to buy out a competitor. They might get an opportunity to buy another territory. So we want to make sure they have enough capital to be able to do that and rework their loan. Typically, you'll have to wait a couple of years and show good returns to redo an SBA loan. However, if you have enough capital you're working with and everything, you might be able to negotiate some terms and perhaps buy out that competitor. Maybe they'll hold the note a couple of years.
Yeah, do some seller financing or something.
Correct. Mm-hmm.
Any other points that you'd like to get across for someone exploring the SBA loan before we jumped into the 401k?
Yeah, preparation is the key.
Okay.
And having your house in order. We go over all of the things the bank's going to be looking at, and better to do it that way with a franchise or funding specialist than to go and then find out as you're going along. So we look at everything, we package it, and we make sure that we've got all our bases covered that way.
Time is money, right?
Time is money, and nobody likes to do a whole bunch of paperwork only to find out they didn't get it done.
We're going to be working on a calculator for someone to basically calculate how much their time is worth. And I think that's helpful in terms of like going into a franchise investment. But also how much time do you want to allocate to studying all the financial options, and is it worth your time? Or is it better just to work with a finance strategist?
We have that conversation even when we're talking about a franchise. What is your time worth, and a trade-off for the royalties? It's the same thing. I mean, you should be spending your time on growing your business and getting new clients as opposed to doing all the back end work. And that's really what you're getting with a franchise.
Well said. And then give a little primer on the 401k rollover. And imagine if someone's not eligible for the SBA loan for whatever reason, is that kind of a plan B, the 401k rollover?
It's really can be a plan A. A lot of people, we like to see them hang on to their capital as much as they can, because when you need to go to the bank to get your capital and your capital is there, real easy, no paperwork or anything. So if they have significant IRA or 401k that are not Roth funds and are not with a current employer, in some cases that can be leveraged as well. We'll talk to them about why not use some of your 401k in combination with an SBA loan. And then we start talking about the benefits of doing that.
Okay.
And we can kind of dive into that. One of the things I like to talk about is, number one, you own the new 401k that we set up for you. It's owned by the business. You own the business. You also become an employee of the business. As an employee or an employer, you're able to save just like you did working for someone else. You can put away $19,500 into your 401k. If you have a great year in the business as a business owner, you can use some of those profits to match that up to 100%. You're not obligated to, but you can. And there's also a profit sharing provision that allows you to direct another $18,000 of company profit into the employee's 401k. So there's the short term. If you have a great year, rather than give it to Uncle Sam, why not give it to yourself and to your employees? There's one. And then the long-term benefit of that is whatever amount is owned by the 401k when you sell that business is exempt from capital gains tax. So when you're looking at paying, let's just say, rather than finance the whole business through the bank or whatever, why not have your 401k invested in it? It's just another hedge within your retirement account. And it's going to give you some long-term benefits and even some short-term benefits as far as saving your tax initially, putting money for your retirement, and when you eventually sell the business, saving a whole lot of tax dollars.
Who could this make sense for? Someone that has 50K, 100K sitting around in a retirement account?
We don't like to usually do it less if someone has less than 40,000.
Okay.
But if they have 40,000 or more available, basically what are, when you have an IRA or 401k, what is your financial advisor doing? They're taking your money, they're pooling it, they're investing in stocks, bonds, and mutual funds, right? And which is basically other businesses you're getting a little piece of. If you do your research and you pick the right business and you have the ability and you're going to work hard, why not invest in yourself?
Sure.
So that just becomes part of your portfolio, and they still can contribute to their 401k and invest in stocks, bonds, and mutual funds through an advisor. So we really like using that in combination with an SBA. And I think it gives you one more thing that a lot of people don't think about. If you have employees, your employees typically are going to ask, or before they become employees, they're going to ask a couple questions.
Yeah.
Benefits. Okay. How much are you paying me? What are the benefits? And the benefit could be a 401k plan. It's all set up for them.
Nice. And go through some of the cons, because I understand you can't have an LLC or pass-through entity as part of this 401k company if you're doing this.
Correct. The IRS says it has to be a C Corp. There are a couple exceptions if you're a single employer or whatever, but for the most part, most people are going to fall into the part where it has to be a C Corp. It's its own standalone entity. Now, you will hear about double taxation because a C Corp pays its own taxes. And then you pay as an individual on whatever salary you take. You'll hear that one. You'll hear the argument that, a C Corp is more complicated. And it really isn't. And really, if you work the process, and I think this is important, and explain it to the client, the C Corp is set up to say you need to save enough money to have a rainy day fund, have the ability to grow. And then also, most of the rest of the money is really going toward your retirement. Pay yourself a salary, put your rainy day money away, and your money to grow your business a little bit. The rest should go toward you. That's the whole purpose of it. So a C Corp pays the least amount of tax on the first $50,000 of earnings. And actually, there's some other benefits. There's more tax write-offs with a C Corp. You can carry over losses multiple years. So when you look at the big picture and then you start saying, well, what's the cost of this? And then you compare and we look and breakdown of how much is the loan payment going to be? How long do you plan on having that 10-year loan? Are you going to pay it off early or not? And what's the cost of interest going to be over that time period? Now you weigh it against those offsets and you say, which one makes more sense for you? We cover that with clients.
Or multiple. I mean, speaking from personal experience, my brother and I have different entities. One is a C Corp, the other ones are mostly S Corps, and working with our accountant, that made the most sense for kind of our fiscal planning.
I have both, so I have an S Corp and I have a C Corp because I have a couple of businesses. So I totally understand that.
Any other points on the 401k rollover?
I think the biggest thing is we've all been indoctrinated to set it and forget it and never touch it. And one of the things I go back and I talk to clients on is look at history. I'm kind of a history buff myself and say, you can go back and you can look at historically things that have happened that have affected stocks and affected 401ks. And to me, I always tell a client, I would rather have at least a business be part of my 401k for this reason. If I choose a recession-resistant business, if I choose a business that there's always going to be in demand, and if I do the research to say that that business is going to continue to grow based upon what the projections are, Why wouldn't I want that as part of my 401k?
It
And
probably makes a lot more sense now with the low yield of bonds, and especially if you're in your 50s doing this and you might be retiring in your 60s, you could have a big market correction where for me, I'm 32, 33 now. I could let the stocks ride and there's going to be big ups and downs, but I have a 30-year time horizon. But if you have less time horizon, you could be caught in a bad place if you're looking to retire and you get on the wrong end of the market.
We have a perfect example. I'm 61, and for that exact reason, I'm saying I don't have that longevity to earn as long. And I'm thinking I don't have those time to make those market corrections. And I'm thinking, again, choosing the right business and making that part of your retirement strategy, I think makes all kinds of sense.
And then what echoed with me is the cap gain exclusion, because the average franchisee is not going to hold their business for the generally 10-year franchise agreement term. It's going to be more like 3 to 8 years. So there's going to be a liquidity event, hopefully a very nice positive liquidity event. And if you can minimize the tax impact, why not do that from day one?
Well, that's a great point. If you look at it from this standpoint, and we always talk about, hey, in 3 years, are you prepared to sell your business if you got the right offer, an offer you didn't want to refuse? 5 years, whatever the case may be. But your point is well taken. That money goes back into the 401k. It can stay there and work for you, or it can be used to buy another business. And guess what? You didn't lose on that capital gains, which there's talk now about capital gains going up to 28%.
Exactly.
In my mind, that's insane. So.
Yeah, and you look at some states that they also tack on their own capital gain above the federal rate, and that can get up to the mid 30s, if not higher.
Oh yeah, people leaving certain states. I hear there's taxation. You sell your business, you want to leave the state, they want to tax you. Yeah. If it goes into 401k, you're protected.
Well said. So we've gone through the SBA loan, the 7(a) program that's most used to fund a franchise investment, the 401k rollover. What's the other option? Personal loan?
Sure. We do work with some lenders that do personal and business loans. Business loans, if they've been in business, have an existing business, or the business has been open a couple of years, that's a really good option. They don't have to go through the SBA process. Interest rate's a little higher. The term is a little shorter. Typically, they're 5 to 7 years.
Okay.
Personal loan, like let's say somebody has really good credit, but they don't have quite enough to cover that 50K in reserve and the amount they'd have to put into the SBA 7(a). We might want to, and they have income. We were going to talk to them about a personal loan and say, hey, this is a way to get this off the ground now. You pay a little bit higher on the interest, but your money comes quicker, usually in 3 to 4 weeks at the most. You can get this business started, start earning that income, especially if it's a quick cash flow. And then we can say, we can look at an SBA down the road for your business.
It's probably going to be easier.
Much easier
for their underwriting
cash flow. So those are real options we talk to clients about. Again, it's almost the same thing as an SBA loan. Good credit, having your credit cards paid down to 35% or less, balance to limits, making sure that you're up to date on your payments, no late payments, making sure that all of your financials are in place. That's going to position you to get a higher amount from a personal loan. Now, granted, they're not as high. Lenders aren't lending as much as SBA is. However, anywhere from $25,000, we've got people as much as $150,000 loans, personal and business loans. And if your spouse is working, you can do a combination where your spouse and you get a personal loan, and it might bridge that gap to put you in position to own that business.
Okay. Any other financing mechanisms that you commonly explore for your clients?
Sometimes we get people requesting, equipment loans and stuff. What we found is they've been too expensive. The cost of money is too expensive. So generally speaking, those are the areas that we look at. There is some options. I know we talked a little bit about it at conference, which was, there's gift money. And, let's say you're short a little bit. If you used to be family, friend, or fool that could loan you some money to get the business started would be okay. The banks have tightened up a little bit on that. They'd rather see immediate family. They want to see where the money's been for the last 60 days, but they can gift you money. And one of the questions that usually come up is, well, there's a maximum on a gift of 15,000 or you're going to be taxed. Very few people pay that tax because it only goes, if you exceed the 15,000, it goes for a lifetime. In other words, you have a limit on how much you can give somebody over a lifetime.
And
so
it's like,
it really
what,
doesn't
it's something
apply.
like 5 million or something high.
Yeah. So an accountant filing your taxes can get you around that really easy.
Yeah.
So it's an option for people. You know, sometimes a person wants to be investor. I should say this. I've had a client that, you know, was going to gift their daughter the money. And after we talked about the IRA 401k rollover, they said, well, shoot, why wouldn't I just use my tax money, take the tax advantage of that, do the rollover with that, and then she can buy the stock back from me over time. So
I like that.
We try to get creative with people and say, what options do we have on the table?
And how do you work with clients? Do you charge an initial consultation, or how's kind of your workflow for someone that's looking to buy a franchise and needs financing?
It depends on the scope of the work. I'm not nonprofit. It doesn't. After that, we do charge a fee. Typically on SBA loans, it's 2%. But again, we don't apply that charge until we found a bank that's going to take on the loan. So once we get a bank, and once the bank does a pre-screen, I don't use pre-approval because there's no such thing, but a pre-screen to say, yes, we'll take this on as long as all this is in place, then we'll assess a 2% fee, which is really the minimum. So.
Well said. It seems very fair given all the work that you're doing and the strategizing and then also executing alongside the client.
Sometimes I think I do work too cheap, but that is what the current terms are.
And Al, any other points that you'd like to get across for those that are listening to this podcast or YouTube video on financing a franchise?
Yeah, I would really tell you that knowing that you're in front of the right bank, knowing that the bank is the one that's actually going to fund a loan, not a branch office, eliminating as many middlemen as possible is key. Being in front of the right bank and knowing what they're looking for, and working with a shot caller, decision maker, whatever you want, a kingmaker, whatever you want to call it, at that bank is critical, and that will increase your chances of getting the loan. I've read that the SBA rates are somewhere between 25 and 40% success rate. You can improve upon that by doing just what I just said.
And okay, what's the best way if someone's looking to get in contact with you, Al?
Well, they can find me at al@fundmyfranchise.com. They can reach me at my office, which is 541-831-0071.
Perfect. In the show notes, we'll also leave your contact information if that's okay for people to get in contact with you. And do you also help people that are buying an existing business? Because we do have folks on vettedbiz.com that they don't want to do a franchise for whatever reason, and they're looking just to buy an existing non-franchise business.
Absolutely. We've got a ton of experience with that. We're working with several clients right now. What's important to know about that, people buying an existing business? And unfortunately, we all don't want to pay more tax than we should. And a good CPA, a lot of these business owners, when they go to sell a business, they don't think about selling it 2 years prior. But what the bank is looking at is they're looking at the last 3 years of the business's performance. So when they're asking price, typically what we see is the asking price is too high as far as what the bank will fund. So we always try to tell them it's important to get a good valuation, put some real numbers together, and prepare for that sale. So that makes it a little bit more difficult to get the loans. A lot of times the business might very well be worth it, but the numbers don't show it. So we kind of get involved in that early with the business owner and say, you know what, you might have to sell it for this and carry a note, but this is what we can get financed.
Well said. And I do see a lot of seller financing, whether it's for 10%, 20% of the sale price to get the deal done.
Yeah, and there's certain banks that'll only do resales. So it is important, again, going back to have the right bank and the right plan.
Right bank and then the right decision maker at that bank.
That's right. Exactly.
And I can't imagine, unless you're doing this full time, I can't imagine you having that Rolodex curated.
You know, they don't. And, you know, it's kind of interesting is a lot of times these bankers in these places move around. So it's important that you stay up to date and you're always looking, well, at least I'm always looking for lending partners.
Cool. Well, Al, this has been great for me. I've learned a lot. I'm sure those listening or watching have also learned. And again, I'll leave your contact information for anyone that's looking to finance a franchise or small business.
I really appreciate the time and the opportunity. Thank you.
Thanks. A final question. What is one piece of data or metric that you're tracking daily or weekly to grow your business?
I would tell you the one piece of data that I'm looking at is who's lending and what type of industries they're lending to. That's very helpful to me. Many times I get clients that are in the very early stages. They're not quite sure what industry they want to invest in, or they might be sure and they may want a second think about it because it may not be the right one. So that's the data that I track most often, and see what industries are growing and which ones are going to be the minimum amount of risk for the banks.
That's well said. And hopefully Vetted Biz can complement you on getting that data so you can
Absolutely
best help your clients.
That's one of the things we talked about. And I'm looking forward, being a data guy myself. I'm really looking forward to working with you guys.
Awesome, Al. Thanks.
Thank you.